Welcome. My name is Michael Tanga, and I am part of the Africa sales team for Treasury and Trade Solutions at Citi. It gives me great pleasure to introduce to you the new video and podcast series by Citi, looking to provide insights into Sub-Saharan Africa's very dynamic regulatory environment. Over the past couple of years, we've seen significant regulatory reforms on the continent across areas such as payment infrastructure, data and digital identity, sustainability, and cross-border trade. We have also observed a rapid acceleration of these reforms brought about by the COVID pandemic. Within banking and financial services, we have also witnessed the phenomenon of fintech companies, opening up the industry to increased partnerships and definitely impacting the regulatory environment. Therefore, in this video series, we will be interviewing industry experts, regulators, and policymakers across the continent to share their views on these key regulatory trends. Thank you very much.
Hi, everyone. This is Minaz Bhuiya from Citi, Sub-Saharan Africa's Treasury and Trade Solutions team. Welcome to this session of our Regulatory Insight series. Today, we're going to talk about the African Continental Free Trade Agreement, and I'm absolutely delighted to be joined by Hubert Danso. Hubert is the CEO and chairman of Africa Investor Group. He advises institutional investors, governments, and development financial institutions on major infrastructure and private equity investments in Africa. He is also the managing editor of Africa Investor magazine. Welcome again, Hubert. We are so pleased you could join us.
My pleasure, Minaz. Glad to be here.
Thank you. So, Hubert, I'm just going to jump right into this. When we meet customers, governments, or development financial institutions across the continent, the Free Trade Agreement is cited as the next stage for growth and development in Africa. Can you talk a bit about the vision of the Free Trade Agreement and the change in mindset of African entrepreneurs that it seeks to achieve?
With pleasure, Minaz. So the African Continental Free Trade Area was established to support the continent, increase into intra-African trade flows from what we understand to be a very low base of about 16% of intra-African trade. And it was really designed to accelerate the continent's industrialization and value addition to our goods. It also serves to catalyze and improve investments into our trade-related and logistics infrastructure, and boost our regional and global supply chain and trade and investment competitiveness. So in essence, the African Continental Free Trade Area represents the world's largest free trade area by number of countries since the establishment of the World Trade Organization. It constitutes a single market with harmonized customs for all African countries and addresses at least a $1.4 billion population, representing a combined $3.2 trillion plus GDP. So unlike many other agreements, this is uniquely a trade as well as a development instrument for us to really drive structural transformation and industrialization. So just to finish to your sort of point about the key mindset shift for African entrepreneurs and businesses, in our view, it's really twofold from a mindset perspective. One is that businesses and entrepreneurs are encouraged through the African Continental Free Trade Area to see the continent as one domestic market and the rest of the world as the export market per se. And secondly, we must be forward-leaning as the private sector, as entrepreneurs. We must be forward-leaning and proactively propose and pursue innovative business-to-government partnerships with governments on tech and trade-related investment opportunities like never before. And the agreement gives us so many opportunities to do that because there's ongoing negotiations that require strong input from the private sector, in particular on e-commerce, investment, intellectual property, and competition. So perhaps I'll leave it there.
What resonated with me, one was development opportunity on the continent. So, when I think about the African Continental Free Trade Agreement, there's obviously the aspect around development and enhancing trade, but there's also an aspect around providing the large young population in Africa access to information, access to education, access to capital to really foster that entrepreneurship. Would you have a view on what the African Union or the governments are doing to set policies around these developments?
Absolutely, Minaz. I mean, the agreement is really for the ultimate benefit of the young entrepreneurs, the young generation, the youth of the continent. And as we know, we have a significant youth bulge of young people relative to the rest of the world. So they're really critical to the future success of the African Continental Free Trade Area. And this is well understood by governments on the continent. Lots of forums, lots of activity in terms of trying to intermediate these types of data, the types of capital that are required for the youth, even to the point where, I was having a conversation just recently with the Secretary General of the African Continental Free Trade Area, and there's talk about how to even have youth banks that support the youth access finance or different instruments. As you know, we have Africa PLC, which is our innovative B2B and business to government, multi-sector, industrial e-commerce marketplace and fintech platform. And that really does focus on improving intra-African trade flows, cross-border payments, supply chain transparency, logistics, and access to trade intelligence, which is the data, and of course, access to the markets, which we believe is critical. So, in terms of a public-private partnership, Africa PLC is supported by the African Continental Free Trade Area Secretariat, which is the big public component. And then we've brought on board a number of other partners like the International Chamber of Commerce, DHL, Chartered Institute of Purchasing and Supply, amongst others, including you as Citi on our trade finance working group. And we just, we're really pleased with the great work that you provide us there. But, as a true public-private partnership, Africa Investor, through working through Africa PLC with the African Continental Free Trade Area Secretariat, ICC, the World Customs Organization and Bern Union, are very committed to supporting young entrepreneurs and women through our recently launched Digitize 5 Million SMEs initiative, which provides young entrepreneurs with essential data, information, trading partners, and business and investment opportunities through africaplc.com. And we also see new partners that share this philosophy joining this particular initiative on a routine basis. So I think this coalition approach, so that we as the private sector can not overburden the public sector with lots of different relationships and lots of different initiatives. We are always encouraging partners to come together through an ecosystem approach so we can, interact more efficiently with our public sector partners and really drive those sustainable and long-term partnerships to make the African Continental Free Trade Area the success we all know it's going to be. So perhaps I'll leave it there.
Thanks for that, Hubert. So I'm going to move a little bit around, the actual implementation. So we've got 54 countries in various stages of development, 54 countries with their own local security, fiscal capacity, elections-related issues. Now, for everybody to become one market, it has to happen over a period of time, and we need to make concessions to many countries. Now, when I kind of think about this, and then I think about some of the smaller, more open economies in Southern Africa or East Africa, it strikes to me that they would initially benefit the most from the free trade agreement. So just looking at, a few years down the road, would you expect to see Pan-African or global companies moving to relocate in these countries? And just to kind of follow that up, what kind of advice would you give a hypothetical large consumer goods company that's looking to come into Africa and set up a presence here?
I would say, look, trade is a long-term commitment which requires long-term planning and partnerships. As is true with all things, the reality is there will be some winners and some losers, some early advantages for some. But in terms of the African Continental Free Trade Area, we feel that this is being addressed through a number of concessions and incentives and resources that are being given and lined up for member state countries likely to need some extra help for revenues lost or industries that may be adversely affected, which, I'll posit the point, which in itself could represent opportunities. Some countries may be more motivated to do more in the context of this agreement than others that may feel a little bit more advantageous. So, for example, the African Export-Import Bank and the African Continental Free Trade Area Secretariat are developing an interesting product, the African Continental Free Trade Area Adjustment Facility, which essentially gives governments, who are slightly disadvantaged, access to new facilities that will support some of their key markets. And that, again, is something that I think that the multinationals, as you're talking about, that look to relocate, should also be very mindful and sensitive to that. I was at an event recently and someone asked, what's the largest company in Africa do you think is going to be the largest company in Africa in 10 years? And the answer that won the day was that company probably has not even been created yet. So there are lots of opportunities that are still to manifest themselves. And a smaller country, if it poises itself and has the right level of commitment, could potentially outperform a country that has all the endowment of the good advantages, but hasn't necessarily executed on them. So for the hypothetical consumer goods company, global company, I would repeat what I said earlier, which is really take a long-term view and recognize that the strategic advantages from the agreement can be viewed and unlocked from many geographies. I would also say that this includes, in some cases, the least likely candidates, especially as we're seeing the reconfiguration of African and global supply chains, where goods are likely to be increasingly manufactured closer to the consumer. Value addition rather than primary exports of raw materials is a priority for the continent to industrialize. And, we have this chronic issue which the African Continental Free Trade Area is hopefully going to solve, which is import substitution, where we export our goods in a raw form and then re-import them. And that's about a $30 billion cost to the continent at the moment, which is actually more than the overseas development aid that we receive. You know the saying, we're exporting value. To coin the phrase, we consume what we don't produce and we produce what we don't consume. So whilst you mention improved business across and in Africa, supply chains are being reconfigured globally, and access to the continent and from the continent offer many strategic access points to service Asia, Europe, North America, and the Middle East and global value chains. So we really want that point to sort of hit home. And then finally, as we look at the global food trade market, just an example of how a global company could reposition, take advantage of the African Continental Free Trade Area Agreement, and then get access to global markets. If you look at the continent's share of world food trade, we are around 4 to 6% of that particular market, even though we host over 50% of the world's most arable and uncultivated land. So very specifically, the hypothetical multinational company that we're talking about should see the African Continental Free Trade Area as a tool or an instrument that represents a commercial and an investment case to equip and assist them, access and increase, their access to the global market. And in this case, the food market is an 11.7 trillion global food and grocery market that's, predicted to grow 5% between, this year and 2027. So build into your supply chains and procurement and investment strategies all of the benefits that the African Continental Free Trade Area may be able to give you in this reconstellated geopolitical economic world that we're living in.
Thanks so much, Hubert. As I listen to you, I'm thinking we've got this amazing opportunity now with that single market, with 54 countries, with 1.5 billion population, and this amazing technology available today to bring incredible visibility around where the underlying goods are and across where they are during that cash conversion cycle. What are the trends that you're seeing in digitized trade finance availability and pools of capital available to finance such activity today?
Look, there are lots of opportunities and lots of innovation globally. I think in the continent we're not left behind as far as that conversation is concerned. Lots of interesting and dynamic activity. I mean, as you know, the continent has more than 40 different currencies. There's a lot of cost associated with convertibility. And this is all something that African heads of state have prioritized to be tackled. Over 50% of mobile money transfers actually involves the continent. And there's a lot of innovation brewing and percolating as far as that's concerned. And that includes aggregated and commoditized products that are being developed, packaged and sold, for example, to institutional investors with the goal of sort of democratizing the availability of trade finance and reducing the purchase order to cash conversion cycle, especially for SMEs and government procurers. But one of the important and interesting things that has come to light a lot more through our digitized 5 million SMEs campaign and our work with Burn Union, which, as you know, represents the largest export credit and investment insurers, the absence of data, the importance of credit-related data on African companies is absolutely critical. So we actually had to establish our own platform that could actually provide that credit-related solution and service, effectively a credit bureau. So trade data, credit information significantly enhances SMEs and corporates to competitively access trade finance and credible trading partners. So whilst we have the tools and the access of the underlying instruments, I don't think on any level we should underestimate the power and the importance of having appropriate data and investing in quality data as a means to enfranchise SMEs to get access to trade finance tools, facilities, and instruments, amongst other facilities. Could be logistics, anything where there's a credit that could be extended to improve the cycle is very important. I mean, that's one of the lessons that we learned very early on.
Question, Hubert. While trade in Africa can grow, one of the things that strikes me as sometimes as strange is that US dollar is the settlement currency of choice for all trade within Africa. Now, some of it is driven by the underlying commodity being priced in dollars, and some of it is driven by uncertainty around that local currency store of value. Do you have any insight in terms of work being done by Pan-African players and regulators in making the payment environment within Africa more efficient?
Yes, as I mentioned, 40 plus currencies, unnecessary in this day and age, costs of convertibility, over 50% of global mobile money coming from Africa is fertile ground for developers and innovation in this respect. So again, lots of energy from African governments and regional multilateral banks who are supporting private sector initiatives to be able to bring innovative trade finance and cross-border payment-related solutions. We as Africa PLC have our own stable coin initiative called the ZARI, and that, we've had a lot of learning that's come out of that to the point where we're supporting a number of different initiatives at the central bank digital currency level. And we're actually seeing, a much closer relationship between governments and central bank digital currency products and projects, and the ability to address, as you mentioned, through trade, some of these big issues like, the underlying anti-money laundering issues and the transparency concerns, because trade and cross-border trade are ideally suited to this type of, trade distancing environment where digital currencies, fintech innovations are really front and center. So that the ability for the actual good, the underlying physical traded good or asset, and all of the different sort of technologies that are available, including blockchain, that can enhance the traceability, are exciting prospects and opportunities. And we're seeing a number of projects across the continent. I mean, on that point, we also believe that Africa can become a very significant player in the CBDC, the central bank digital currency value chain, as a driver for trade through the African continental free trade area, because we can stabilize it through our own resources on the continent. We already know that the continent has 90% of the world's platinum, 90% of the world's cobalt, 50% of the world's gold, 35% of the world's uranium, 9.6% of the world's global oil output, two-thirds of the world's manganese and 75% of the world's coltan supply. And that's on the back of a continent that has only been geologically tested. Less than 50% of the continent has been geologically tested. And the suggestion is that there is at least the same amount of resource underground than that's already been explored. So we think that there are very exciting opportunities for the continent to really be able to, provide the global digital payments, the global central bank and the emerging central bank digital currency industry with, some very exciting opportunities. And I think that the African Continental Free Trade Area is really beginning to drive a lot of that innovation and excitement.
Thanks, Hubert. Thanks so much. Clearly, this is a really exciting time to be in Africa and to be part of this journey. And clearly, we all have a tremendous amount of work to do to make sure that this is a success. Thank you.
Thank you. It's my pleasure. And I really appreciate being hosted by one of our leading global trade finance and banking partners like Citi. I think you'll appreciate that there's a real opportunity that we see for the continent to not only leverage the African Continental Free Trade Area to improve and increase intra-African trade, but we think there are exciting opportunities for global companies to locate, add value to our goods, and then also serve some of the new global markets. So we're very excited about this opportunity with you and the African Continental Free Trade Area.
Thank you, Hubert.
My pleasure.